I should be broadcasting on YouTube. Again, I moved to another new place today, so if someone could just confirm that that's up properly and my screen showing on there, I really would appreciate it. Yeah, Rich, we need something. Nothing on YouTube yet. I'm gonna be really annoyed if this doesn't work. IBM is out. I'm up. Okay. I'm going to go based on Andy's word here and assume that I'm up. Thanks. Awesome. Awesome. We got good confirmation. All right. I'm an associate member of T3 Trading Group, which is an SEC broker-dealer and member of FINRA SIPC. You should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure here. Yeah, did some trading in some of these stocks. Didn't add anything new, but oh man, what a day. All right. All right, let's go to the charts, guys. I tell you, the feeling I have right now, the only thing I can liken this feeling to is stepping out of the ring after a fight. And I've said that sometimes not really fully meaning it, and today I like fully mean it. I feel like my brain is fried. I feel like my hands are shaking. The P&L swings today. Oh my god, I can't believe I'm green. I'm pretty sure it had to have been. I had the biggest red to green day I've ever had in my career. Probably the biggest intraday upswing I've ever had in my career. And oh my god, I don't even it's exactly what it feels like. It feels like you just got into a tuffle with someone. I don't know what else to say about it. But let's try to do a meeting about it. All right, how did the market close today? So the market closed up 0.35%. So it's just a regular day. Market closed up a little bit, right? The Qs are up a nice solid 0.45%. And the IWM, wow, up 2.5%. Almost looks like something maybe happened today in the market with how the IWM is up 2.5%. Really kind of being the leader here. Obviously, I say all that in joke, in jest, jokingly, whatever. See, I told you guys, my brain is just not working anymore. This candle here in the market, excuse me. This candle here in the market, but not the VTF. What are you talking about? You can't see my charts, or you can see my charts. This is a spare bedroom I turned into my office out here in Idaho. So I know it's got the bed back there. But you guys can see the chart that I'm sharing, right? You guys can see the screen? Okay, thank you. Now cursor's not moving right now. All right. Just want to make sure. Again, I'm on new technology in a new place again today. So just wanted to make sure everything's running properly. Like I was saying, this daily candle here in the SPYs is insane. What's the range on this candle? Range on the candle today is basically $20. I'm curious to know what is the range on like a typical monthly candle. I actually don't have a monthly candle accessible here. I've got a weekly. Let me just go to a random week here that looks pretty big. This random week that looks pretty big is still not as big as today's trading session. So we moved today as much as we probably move in a typical month, all in one day, the range. Again, just totally eyeballing this weekly. Are there any of these candles that are 20-point ranges? This one here is also a big candle. It's not quite 20 points. This is a real big one. This one's got to be 20 points. Yeah. This one is about $25 here back in, but I'm going back to, again, I'm just eyeballing it, but I'm going back to November 2020 to find a weekly that has a range that's as big as today. As big as today. It's nuts. Today was nuts. It was absolutely, absolutely nuts. I don't even know what else to say about it. I mean, I could break it down for you guys a little bit on the day here. We could talk about what our game plan was coming into today's trading session. So the first thing I would say is, as far as individual stocks go, I don't have a ton to talk about. It's all about the market. When you are in typical price action, when you're in normal times, individual stocks matter, I think, a lot more than on a day like today. And on a day like today, sure, you still want to be looking for relative strength and relative weakness, especially when you're coming in and buying stuff on an intraday basis, but everything is going to move together. Correlations increase across the board. Everything is going to move together on a day like today. This tail is 100% real. Coming into today, it was basically the same game plan that we had on Friday. What did we talk about? We talked about risk management always being first and foremost. We talked about how to buy, that we want to try to be buying on the way up, not buying on the way down, and that we were looking for a couple different types of setups today. And again, same thing as Friday. We're looking, one potential setup is the red to green trade, right? So going back to the daily chart here, basically you get like a red dog reversal, or what we've been calling an Oldensmith overthrow recently. Yeah, we should do that, which is basically when the market trades back through the previous day's low, so it goes from red to green. Usually you want that to be on at least the third day down. Well, today is, I would still argue that this is a red day here. I know it closed, it's a green candle, and it basically closed flat on the day, like at zero. I would still argue that this was basically a red day though. So if this is a red day, 1, 2, 3, 4, 5, 6, 7th down day in a row. And even if you eliminate this, it's still the 5th down day in a row coming into today's trading session. So again, when you're in periods where the market is very oversold, when you're 3+ big down days in a row, when all of your sentiment indicators are kind of in that buy zone, the first thing that tells you is that you can't go short. You got to be looking for your longs. But what do we know about a market that's extended? A market that's extended can always become more extended. I mean, look, Wednesday last week, the market was extended to the downside, right? And actually Thursday last week, the intraday bounce was so violent that we touched the 80 MA and satisfied all downside extension. But by the time we closed, guess what? We were extended. And then from being extended at Thursday's close, look at what happened on Friday. Still closed on lows, got even more extended. So we know that extended markets can become more extended. We know that just because the short-term sentiment indicators in the buy zone doesn't mean that you can come in and buy. It's been in the buy zone for the last like 4 or 5 days in a row, right? Today I think was actually the first day that the intermediate time frame sentiment indicator was also in the buy. And pretty much every sentiment indicator I've seen, there's a bunch that are out there, we're all kind of in the buy zone. There's a lot of information out there about how this is almost like the degree and speed to which we have sold off these last 4 or 5 days without a bounce coming in is like a historical anomaly. You just don't see it. So what does all that information mean? It means that you can't short, is basically what it means. In my opinion, maybe some scalping shorts, really small time frame, but you can't come in and do any serious short selling when you have those types of conditions, because for every time that you do get the continuation of extension, it's significantly lower probability. More times than not, when those indicators are in the buy zone, they're indicators for a reason. You do catch a bounce back. So I don't want to be looking for shorts on any of these days, honestly, even though you could have made some decent money doing it. I want to look for longs, but I know I got to be strategic about it, because I know that a market that is extended to the downside can become more extended, and I know that an indicator is only an indicator, right? It indicates something. It doesn't actually mean anything. So it's not a guarantee, right? It's just, it indicates to you that, hey, maybe there's certain factors here that are telling you that the market, based on historical analysis, based on statistics, depends on the indicator that you're looking at, should be able to catch a bid. But we can't just blindly put bids out. You could have been blindly putting bids out in the SPYs here at 448. Oh, the market's extended to the downside. Guys, we went to 420 today, just about. Funding secured. Before an actual snapback occurred, right? So that's why on these types of days, what I'm really trying to preach to everybody, what I really am trying to hammer home, is yeah, we want to look for our buying, but we have to buy on the way up. You can't buy on the way down. So the strategies I'm looking for there are, one, is that red to green trade. Because if that's what's happening, then inherently you're buying on the way up, right? The problem with that game plan for today, and it wasn't the same way a problem for Friday, the problem with that game plan today was that the gap down was so big that, let's say that we were strong right off the open, and I know we had a midday reversal today, which is interesting, and we can talk about it. Let's say that we ripped up off the open and we're going green. I don't want to be buying when we're going green when the low of the day is 431. You know, I don't want to be buying after an $8 up move, putting on $8 worth of risk in the SPYs or whatever individual stocks that you're looking at, and feel like I've got a really good risk reward. If we're having a smaller gap down, that might make more sense to take that trade. So what I'm looking for today more is some sort of capitulatory price action to come in. So that was the second strategy, right? So basically, and when you're in a really big bear market like this and you're really oversold and you keep going lower, that's actually usually when you do see capitulatory bottoms kind of come in. And what that looks like, honestly, we saw it in a small time frame really well, and I know we didn't do an afternoon meeting on Friday, but we saw it on a small time frame really well at 10:20 on Friday. That's what short-term capitulation looks like, right? The volume was increased, especially if you look at certain stocks. You had confirmation on stocks, and that led to a really good bounce. I know that Friday's price action looks like tiny compared to what we did today, but yeah, keep in mind that the price action movement, the range today is like the range of a typical month. So it's insane. This was a huge bounce on Friday off that low, and you can see the hammer comes in. It's extended on multiple time frames. You have a little bit of a pickup in volume on the SPYs, which wasn't too great, but you had certain stocks that really looked like they were capitulating at that time. Like I remember when Josh called out Facebook. The Facebook volume at that time as this thing was hammering back up. So like the SPYs were like, okay, this is worth noting here, but there were like a whole ton of these individual stocks that were really showing more like a capitulatory sign. That's the type of stuff I want to be buying. So going back today, that's the other thing I'm looking for. And I'm trying to be patient for it. I can't just be putting my bids out on the way down. And what made today a little bit tricky was that the volume was elevated generally across the board. So like when I was looking at this little tail that came in at 950 and this tail here at 1010, this one I definitely liked better. I remember looking at this 950 one and being like, okay, you know, I've got broader elevated volume. And by the way, you can see that in these daily charts, right? very, very clear that you got broader elevated volume. The volume in the Qs today is bigger than any day in the COVID crash. It's like double almost is what it looks like when you eyeball it. That's how insane our volume was. So I'm looking at these 5-minute charts of the indices first here at this time at 950. And this is a time of day, by the way, when I like those capitulatory bottoms to come in. Opening fear, I've seen this happen many times in my career. That opening fear trade comes in. Everyone freaks out for 30 minutes, 15 minutes, something like that. And then the smart buyers come in and they take the stock from the weak-handed panic sellers. And then that's it. So I liked the time of the day here. You had the overall volume, but no broader increase in volume at that time. And I'll tell you what, if I wasn't sure then, I was pretty sure thereafter. The market just wasn't catching a bid off of this. This was too slow. The thing about the capitulatory price action when that happens is it should be like violent almost to the upside. Brandt described it into the VTF at one point really well in there. Like, it's the rally should just be violent here, and it's just not. And that's what you're looking for. Like, if you guys remember, even on Friday when this happened at 10:20, it was so fast. That, like, Apple sell order followed by that buy order where, like, Josh called that out so quick, and the time I typed it back up, it was already, significantly higher. That's kind of what it should be. It should be so fast on the upside. And I'm watching it, and I even remarked, I was like, guys, the range is kind of tight here. There's no real violent snapback, and then this candle closed like garbage. It's like, okay, that's not it. We sold off a little bit further. Then at 10:10 here was the next spot to watch. Again, looking for spots to buy on the way up because of all of the other factors that we have out there, and monitoring the risk in case we're wrong is what you got to do. And even this one just didn't feel right. I know we had a little bit of a pickup in volume here. It's also now, after 10 o'clock. It's similar to the time of day when we had our short-term bottom last Friday, which I thought was interesting. The VXX, we're paying close attention to the VXX. This put in a little bit of a shooting star at the same time. There's a good pickup in volume on the VXX also there. And it's like, okay, this should give a bounce now. This should be a bounce. This should be a 15-minute correction off of it. And I was calling for that 15-minute correction. And then even throughout that 15-minute correction on the way up, I was just remarking to you guys, like, it just still doesn't seem right to me. And then this, negative candlestick kind of came in here. I was like, all right, market needs to give a higher low. I'm concerned about it. I wasn't surprised at all that this didn't turn out to be an absolute bottom. I'm annoyed by the time of the day in which the bottom actually occurred. And I think I remarked it at that time. I know Pat was super on point with calling this out at the low of the day today, calling out that he was short in the VXX. And at 12:20, midday here, is when my 15-minute chart becomes a lot more important to me. And Pat was super early on this VXX short, getting everybody's eyes on it. And the 15-minute chart gave some more confirmation here. This is a pretty high volume VXX bar, considering that it's the 12:15 p.m. 15-minute bar. This one volume is usually the lightest of the day. The volume really picked up, gave us a big 15-minute shooting star. The SPYs gave a nice little 15-minute doji. Again, accelerated volume. It's the biggest volume of the day outside of the open, but keeping in mind that it's 12:15. And I remember saying that this one feels different to me. And I get nervous to say that. It's hard sometimes, when I know everyone's paying attention to me and looking for the signal. And it's hard for me at that time of the day to say that I think this is it. And I was like, I think this one looks different to me. Pat was short in the VXX. SPYs came in with this doji. Qs came in with a doji as well. A little bit of a volume pickup. And then that was it. We had a much faster snapback there. You look at it on your 5-minute chart, this was a much faster snapback, a quick higher low, higher high. So right here at the 1:45 p.m. Bar today is when you know that on a 5-minute chart you have kind of a reversal of trend. The 15-minute chart, I needed a little bit more convincing. So this is very tight here to really consider this to be a high and then a higher low. It's kind of like we're just continuing to work our way higher. This was the 15-minute reversal. And I remember when we caught the low at 10:20 a.m. on Friday last week, I remember we got that great snapback. I remember that on a 5-minute chart we had a reversal, right? You can see it here. 5-minute chart, here's your low, here's a high, here's a higher low, a higher high, a higher low, a higher high. But with the ranges that big, I remember remarking this. I was like, all right, guys, we got a 5-minute reversal here. We need to see if we can get a 15-minute reversal. Because the thing about reversals, right, and reversals are really tricky. It's easier trading, by the way, to always be in the direction of the trend, as a general rule. But we also want to keep our extremes in mind. The one time that it will typically make sense to go counter a trend is when you're in an environment that is extreme. And then you can go looking for those counter trend trades. But for the most part, you got to recognize that if you're taking a counter trend trade, it's probably not going to be a reversal. If you're strategic, you find a retracement spot. And that's how I like to call markets, by the way, if I am trading counter trend. I really don't like to get on a high horse and say, oh, this is the bottom. Oh, this is going to be a reversal. Everyone look for the reversal. I really like to talk about strategic points based on technicals for a retracement, because I'm always keeping in my brain the principle that trends tend to last for longer than I expect that they will. They tend to last for longer than anybody expects that they will. And as a great general trading rule, assume that the trend that you're in is going to continue in that direction. Until it proves to you otherwise. And there's a process by which a reversal has to prove itself to you. And that process also has to be on multiple time frames, depending on the multiple time frames of the trend that it was coming from. You know, if you've got time frame continuity to the downside, every time frame is trending down, the only way that you're going to get a full reversal is if every single time frame reverses back up. And that's why time frame continuity is one of our important layers of probability. It's different than if I'm in a 5-minute downtrend, but my daily chart, my weekly chart, and my hourly chart are all trending higher. Then in that situation, the 5-minute retracement can much more easily become a reversal. But if I'm looking at a market that's got time frame continuity to the downside, which this one just about does coming into today, maybe you could still make an argument that on a very, very, very large time frame, because the daily 200 day is still pointing up, that on a very, very large time frame we're actually still trending higher. But outside of that very large time frame, we are trending down on every time frame. So in order for a reversal to occur, to go back to the example I'm talking about, on Friday we got the reversal on the 5-minute, but guess what? The reversal on the 15 never happened. There is no pattern of higher highs and higher lows here on the 15. As a matter of fact, you got another low, and then you got a high, and then we just went into that. Friday afternoon session was so brutal because it was like not even volatile. It was just like this grind down that eventually led to new lows. In other words, a lower low. So going back to today's price action, it's like, all right, we got the 5-minute reversal that kind of came in on this bar here at 145, but I need other time frames to reverse as well. Like that's why like looking for reversals and picking bottoms, picking tops is so hard. It's generally a fool's game. It's usually not what you want to do, because I need the next time frame to reverse, and then I need the next time frame to reverse. Okay, fine. I finally got full time frame continuity of a reversal. And then eventually our 15-minute chart was able to do it here into the end of the day. At 3:15, we finally got confirmation. When this high broke, right, we got a low, and these ranges are so huge. We got a low here at $334 for the Qs. We got a high here at $347. It's a $13 bounce. Our higher low is at $340. It's a $7 drop. And then 30 minutes later, we got that $8 bounce to make the higher low, and then it's finally here at this bar at 315 that we actually have a confirmation of a reversal on the 15-minute chart. And then from a big picture perspective, I was saying even early on in the day, I need a SPY close above 335. I want an Apple close above 160. And if I can get that, then I feel like I've got some bigger picture confirmation, because then our daily charts come in. I don't need to go to any individual stocks right now. But now our daily charts come in. Because we got that close of 435 or better, we actually ended up filling the whole gap. We had a really strong rally right into the close. Because we got that close of 435 or better, Apple, I was saying, 160 or better, because I know what my daily candles are going to look like if I can get those closes. Now, what do I have here in Apple that I still have up in front of me? I've got a hammer candlestick on high volume. Well, once again, right, we were just studying how trends work. What does this candle mean? Is this a bottom for the market? Is this a reversal? I am not good enough to sit here right now to tell you guys that we just hit an absolute bottom. As insane as today was, and honestly the degree of insanity slightly helps your probability of today being an absolute bottom, but as insane as today was, based on my understanding of how probability works over multiple time frames, I can't yet come in to you guys today and say that this is an absolute bottom. I can say that this is a day that's really worth noticing. I can say that there are a lot of signals here that are telling us that at a very minimum, we should be able to get a strong retracement off of today's candle, if not a reversal. But I can't come in and say, hey, we're going to reverse, and next thing you know, the Qs here are going to be back above 390. Because that's honestly what a reversal would look like, is that eventually we're working our way back to 390. It's one step at a time. But, again, there's a lot of things that are worth noting. The degree of the volume, I think Diego said that the NASDAQ today had more dollar value change hands than any other day in history. Very quickly we were able to see that the NASDAQ volume today crushed the COVID volume, that the SPY volume was not quite there. The IWM volume for 2 days in a row, higher than what we saw in COVID. So there's some real signals there. We got these hammers kind of across the board. IWM was actually so strong that it's almost not even a hammer. It's just a straight beastie up day today. But even with that, we're not even at the ADMA. So today's candle tells me that, all today really tells me is that I've got a probability that's better than 50% of the SPYs seeing the ADMA relatively soon, in the next couple of days or so, which is still a big move if that were to happen. Right now, the ADMA on the daily chart for the SPYs is at 450. Another $10 from where we're trading here right now. Maybe $11 from where we're trading here after hours right now. But can you come in and buy, I think, now at the close if you're not already long? I don't think so, because technically you'd have to risk $20 for your potential of $10 worth of reward. So the range today is honestly almost too big. And then we've got all these other macro variables that are going to still play on this market, right? I forgot it was earnings season. Do we got Apple this week? IBM reported after hours today. Pat was like, "Oh yeah, it's earnings season." I was like, "Excuse me, it's earnings season. Do we really need earnings season right now? Can we just postpone this earnings season for like a few weeks until after we get through this insane degree of just broader market volatility?" And we got the Fed on Wednesday also. Oh man, guys, crazy day. Volatility, right? I guess let's just talk about volatility here really briefly and kind of what it means to you as a trader. Generally, we want volatility. Volatility means opportunity, as far as I'm concerned. Volatility gives us good setups. It helps you make money. But there can be too much. There can be too much volatility. Because the other side of volatility is that it makes for a much less forgiving market. If you make a mistake on a day like today, it could literally be career-ending. Making a mistake on a day like today because the volatility is so big and the ranges are so big could literally be career-ending. If you make that mistake let me see, I bought the SPYs here off the open because the second bar of the day was green, and I don't think I'm going to get out of it because I don't want to manage my risk because the market's down a lot. And I say that like trying to sound like an idiot, but we know in reality that you can be a very smart person and get stuck with something like that, right? Where you just like believe in your position so much that you don't want to have that stop because we're so insanely extended to the downside, and you really want to get that bid to come in. But that's a mistake. It's always a mistake to not follow your risk management. And in a low volatility market, or even an okay volatility market, that mistake can be a little bit forgiving. In a regular market, if you didn't get yourself stopped out, let's say you took that trade, which we weren't looking for that trade really right off the open, but let's say you got stopped out, you're supposed to get stopped out in the third bar of the day here, and it's a low volatility market, and you made a mistake, and you didn't, or whatever, or your button didn't work, or you lost your internet, or something happened. Well, you might end up losing a little bit more money than you thought. Maybe some little volatility comes in, lets you work out of the position, or whatever it is. It might not be career-ending. On a day like today, if you don't get stopped out of your SPYs at 430 and you're heavy, by the time we're at 421, you might not have an account left. So, again, volatility, we want it because it creates opportunity, but in these levels of extremes, it's very dangerous because you make a mistake, that mistake could be punishing. And as a general rule, when volatility increases, it's a general rule. What you need to do is take less tier size on your trades and give more space risk, right? But when volatility is this big, you might not. The lesser amount of shares that you might take is no shares because the risk is so big that you can't afford the risk on even taking a couple hundred shares, right? So it's just. The volatility's been too much. I honestly, genuinely hope it dies down. I don't see it dying down significantly anytime soon, but I also don't see us having 20-point ranges every day. Or at least I hope not. I don't think my sanity can handle daily 20-point ranges, daily month movements in an intraday. It's just too much. Really trying to keep it together mentally at certain points today. Like, oh my God, this market's so crazy. And I know some of you guys felt the exact same way as me. So that's really it. I don't feel any need to talk about any individual stocks. I mean, we had some good ones out there, like this Bed Bath & Beyond went nice and green first, right? MGI went green pretty early too, that were noticeable. Was looking at Apple. Apple off the open looked like it wanted to lead, and then it lost that 160, and I struggled to be able to keep it back to recapture it. SoFi was down huge. I wanted to look at SoFi in the $13 area for a gap fill. It made new lows today, almost new all-time lows today, outside of the first month of its trading, and that's after the good news it had 2 trading sessions ago. Oh man, it was all just crazy. But yeah, the big thing really to talk about today is obviously the market itself, the volatility, understanding trends, what we can learn from this, and hopefully we're set up for continuation tomorrow. I don't think that you can come in and buy these prices versus today's lows, but we'll assess how we gap tomorrow morning to assess, what the best way would be to capture. Maybe this market wants to give us another $10 of upside or $8 of upside, snap back to at least the 80 MA, and there's going to be opportunity there, but you can't risk to today's low. We got to see how we gap. For people who were not able to do much buying today or who are going home flat, if we gap up tomorrow, you're in a tough spot. For other people on the team here who are going home decently heavy tonight, I'm going home decently heavy tonight. A gap up tomorrow won't give us too much opportunity, but I'll be happy to take it just because I can actually book profit into a gap up tomorrow just because I've got decent size on still. Arguably too much size. That's all I got. Happy to take a look at any questions that you guys have for me. All right. Andy K saying, I've been trading since the 90s. Today was the biggest intraday P&L swing I've ever had. That was nuts. Yeah, me too. I haven't been actively trading since the 90s, but I've been professionally trading with T3 for 12 years. Biggest swing I ever had. Crazy. Cool. Did Melvin Capital actually blow up today, or was that just chatter? I mean, somebody blew up today. I can tell you that. But I'm curious to know if that was actually chatter or if that was just real or not. All right, looks like the first thing I'm seeing here is from Justin. Derrick, for smaller account traders, what to do when you are hesitant to buy the lows because you do not want to just keep losing money getting stopped out, and then on the other hand, getting FOMO and chasing when the market goes up, getting stopped out when you chase. Justin, I'll be honest with you. The price action that we've seen this week is the least conducive price action to being an entry-level, newer trader that I could think of. Even like the volatility levels that I would consider to be really good levels for my own trading, even that makes it more difficult for newer traders. Because like I just said, a volatile market is significantly less forgiving on your mistakes. Who makes the most amount of mistakes is new traders. I don't want to sound like a jerk when I make this comment. I almost feel like a trading session like today is untradeable if you're a brand new trader. It's too big. It's too big. It's too fast. It's too dangerous. If you're like an entry level type trader and you were struggling to find trades today that fit with your risk parameters, so you didn't do much today, I would give a huge pat on the back to any entry level trader who was like, I just couldn't find anything that fit within my risk parameters, so I didn't really do much trading today. Even though today you could have made it a boatload of money if you bought at lows and sold at highs, that's a fantasy world. This market is too volatile if you are a new trader and you're trying to get involved. So I know that this is not helpful advice that I'm giving to you right now, but just focus on your tier size, focus on your risk management, be selective. But the thing about this type of market environment is that when the moves are this big, they're going to be so fast. And if you're a little bit slow because you're a newer trader, and inherently by being a newer trader, it means that you're going through a longer mental thought process before a trade execution, it just is going to make it so hard for you to be able to execute anything. Because the market's moving so fast that by the time you're through the mental thought process of my layers of probability are lined up properly, my risk is appropriate on this trade, the trader is already gone. It already failed or it didn't fail by then. And as a matter of fact, if something is this volatile and you're a new trader and it took you a time to get into the trade, it's probably going to fail because it shouldn't have even let you in. If it was going to be a really good trade and you had to have a process that causes you to be a little bit slower to execute, if it's going to be a good trade, it's already gone. If it's going to fail, it'll let you in. I'm sorry to say it, but you guys know I'm always 100% honest with you. This is a really difficult market environment if you're a newer, smaller account trader and you're trying to figure this out. So be selective, believe in your process. When the trade is there and the risk is appropriate, take it. Don't be afraid to get stopped out. Don't be afraid to not put on more trades. Definitely don't overtrade, and definitely make sure that you get the stop loss in as soon as you got the trade on. And guys, if anybody lost money today, especially if you're a newer trader and you finished down on the day today, I can't fault you at all. The only thing I would always fault somebody for is if they failed to manage their risk properly. Next from Paul, also as a newer trader. Okay, as a newer trader, on Friday's DOO, I guess it's the Oldensmith overthrow. I assume that you're talking about that 1020 low. Did we ever break back through? I don't want to look at the spies. Yeah, we did, and we even broke back through that previous day's low. Yeah, that was so tricky on Friday. I was able to catch and get decent risk reward due to the clear capitulation, but today I didn't see the same capitulation. Okay, I'll answer that. So I wasn't sure what the entry was, and ashamed to admit that I missed the move. Can you shed some light on what the signals I may have missed? Yeah, sure. So I did that already a little bit earlier in the meeting, but I'm happy to review it again. It was a midday reversal. I really don't like midday reversals, but they're certainly a thing. And sometimes they happen on days like today because that panic selling that I'm looking for that's going to last for 15 to 30 minutes lasts half a day as people are just... If you're a hedge fund and you're managing billions of dollars and your account is blowing up and you got to liquidate, you can't liquidate in 15 minutes. The opening capitulation that I love to see in markets, that's retail usually. Retail capitulation comes in. People panic out in 15 to 30 minutes, smart money, the hedge funds come in, they soak up all that stock, that's the bottom, and your grandma just sold the bottom. No offense to anybody's grandma, I'm just saying that as a joke. But I know somebody here in the VTF was like, my dad just called me about selling all the stocks, that's how I know that the bottom is coming in. It's worth it to pay attention, actually, to that type of anecdotal information. So those opening panic sell-offs that I like a lot are usually retail money sell-offs. But if you're a hedge fund and you're having to liquidate and you got billions of dollars of positions, you can't liquidate in 15 minutes off the open. It could take half a day. So that's one thing to kind of keep in mind, and that's why we do sometimes see these midday reversals this time of the day. We also know that post 10:30 a.m. is when we want to get away from our smaller time frame charts. To begin with, the smallest I ever look at is a 5-minute chart. I never look at less than a 5-minute chart. It's a waste. But a 15-minute chart, even a 5-minute chart, it tends to be too small post 10:30. I still will look at my 5-minute chart. It's more for reference. I'm not taking a trade after 10:30. And first of all, I don't trade typically as much after 10:30 as I do off the open. Days like today will be an exception. But I won't take a trade on a 5-minute chart that's not confirmed on a 15-minute chart. So the real signal today was all on the 15. It was all on the 15. it was this. It was this candle here on this volume, and it was really the VIX, which Pat, again, called out just so perfectly. This 15-minute shooting star on the VIX at highs with the volume there. And the actual VIX was trading at, what, $35, $36 today? I got to look it up later. Maybe somebody can tell me now. Really curious to know what the high of the day and the actual VIX was and where we closed. A print above 30 in the VIX is pretty rare. And I think we've seen over the course of the last 20 years that as another signal, when the VIX is above 30, the actual VIX, it's usually a low for the market. But again, all of those, like I was saying earlier, all those historic statistics are just statistics, right? Indicators are just indicators. You could say, hey, you know, we're in the 1% of all times that the market did this. Well, the next thing you know, maybe you're in the 0.1% of all times that the market did this, because it wasn't done yet. So that was really it, Paul. It was kind of midday. It was paying attention to the 15-minute chart, paying attention to the volume pickup that did occur at noon, recognizing that, you know, this isn't the highest volume candle of the day, which is usually what we would want to see, but it's a very high volume candle for midday, and that kind of was the signal there. I hope that helps. What's STLD doing after hours? Up? Can't really tell. Actually looks flattish. And we had IBM report also. Ooh, IBM is up nicely. IBM's been a nice stock recently. Ever since the new CEO took over, it took a little time, but I think IBM has really improved under that leadership. Cap Home's asking if it's going to be a strange day tomorrow. I mean, I would expect it to be a little bit less volatile than it was today. Tomorrow's also going to be the day before a Fed day, which is usually a little bit of a trickier day. I would expect some upside follow-through tomorrow based on how we closed today and based on the candles that we're looking at. But let's assess it tomorrow. Let's see how we get. Jackie asking if I could review a trade. Absolutely, Jackie. Bed Bath & Beyond around 10:35 today. Okay. Bed Bath & Beyond at around 10:35. Okay, it's a 5-minute chart I have up right now. Stock was looking relatively strong at the time. I took a small position through the 13.15 opening high. So the $13.15 opening high today. Since the ADMA had not caught up to the low of the 10:35 breakout candle. Okay. I heard you got some problems with this trade. I'll tell you about it once I finish reading the question. I gave my stop to 1 cent below 10:35 low and missed on my 1-to-1 kick by a few cents before getting shaken down around 12:15 when this pullback happened. The biggest thing that I would say here is that this is not a breakout and this is not an ignition bar. You're recognizing the relative strength. Oh, I see that there's more to your question too, but let me at least start to answer. This is great relative strength. It's awesome that you recognize the relative strength. Your name selection is good. I'll tell you that. So that's already a great start. You get the right name selection here. It's relatively strong. You're going to the right thing. I can see here from yesterday a little bit of a breakout, and I think I even spoke about it. I was like, oh, you know, we need the stock to first get above, like, you know, 13.20 to 13.30 based on, you know, Friday's action to get some sort of continuation. And that was accurate, but it doesn't mean that I would buy this. I don't really trade intraday resistance levels very much. I like to trade those daily levels more than anything. That's kind of what I'm always harping about, is trading your daily levels with intraday risk. The next thing that I would say to you is that this is not an ignition bar, right? An ignition bar is really going to be coming from a daily breakout. A candle that's just breaking an opening high is not going to be an ignition bar. So utilizing the low of that candle is not going to be relevant, especially because there's no real pickup in volume on the candle, right? Candles, the reason why an ignition bar, which is the candle in which a breakout occurs is significant is because it's also going to always be on very high volume. So if it ever fails and gets below that candle, it means that everyone who bought on that high volume bar is out of the money. When people who bought are out of the money, they tend to sell, right? Which can be a feedback cycle of selling and continue the stock lower, so you just want to get out right away. This candle doesn't really have that. Yeah, you know, it's trading on high volume because everything was trading on high volume. I wouldn't characterize this candle here as low volume, but it's not so significant that I'm worried about people really panicking out on the break of this low. So when I'm looking at this situation, I can't use this candle low as my stop loss. I have to use the last pivot low as my stop loss. And I don't love, by the way, the break of an opening high as a trade in general, but I don't dislike it in certain circumstances, and this is one of the circumstances where I don't dislike it. So I don't mind that you did that. And again, the circumstance here being relative strength, also that it's clearing above some intraday resistance on Friday, which again is not going to be a trade for me, but it's going to be a factor that I pay attention to. But I think you need to be giving this to the last pivot low, because why do we use candlesticks, certain candlesticks for stop losses? We use them because they're significant. I just explained why an ignition bar is significant is because of the volume that's there. Pivots are also significant because pivots are the prices where sellers took control from buyers and buyers took control from sellers. So honestly, the best stop loss would have been the low of the day. I could see justifying here, this low, 1277, as a stop loss too. Because the stock, lower highs and lower lows, right, breaks up, gives you this pivot high here, but then immediately creates a pivot low and then breaks the high of this candle. So that makes this low here important to me. This candle here at 1025 was a candle where sellers took control from buyers and they closed it with sellers in control. Then almost right away on that next candle, buyers regain control and they break that high. So I would say that you could have used this as a stop as well. I don't love this low as a stop. So good question there. I hope that helps. Let me see if you had anything else here. I took the trade after 1030 where the 15-minute chart is more useful, but I didn't want to use the 15-minute 1030 low as I felt that 40 cents risk, and this goes back to what I was saying to Justin, 40 cents risk was too much for a $13 stock, but the trade would have worked out well had I used that low for my out. Yeah, so same thing here with the risk on the stop that I like here, which is down at 1277. Yeah, you know, you're putting on 30 cents of risk. It's a $13 stock. 30 cents of risk certainly sounds like a lot, but and this goes back to what I was saying before to Justin about the volatility, right? And why it's difficult when you got too much volatility like we do right now is 30 cents risk or 40 cents risk in a $13 stock typically sounds like a lot, and almost always it would be a lot. And almost always I would tell a trader that you should not be risking 40 cents in a $13 stock. But today the market moved as much as it does in like a typical month. And this stock, being a $13 stock, was still moving points, right? And if you were able to capture that stock and you're able to keep it into the close, there's some real room for Bed Bath & Beyond to continue higher. I think back to at least 16, and that's just talking about pure technicals, not getting into any of Stefan's fundamentals. So I hope that helps, Jackie. All right. Yeah, KSS was definitely one of the ones in its own world. Macy's a little bit as well, and that's what helped Bed Bath & Beyond have the relative strength. Steve from Denver here is saying, on volatility, I'm just eyeballing it, so it's not scientific data, but 1 year average ATR for the SPYs is about $4.60, but it's gone up from $5.50 to over $8 in 3 weeks. What time frame are you talking about, though? I just don't follow what time frame you're talking about on that average. Is it a weekly time frame? What that average is? Anyway, Sebastian, today at 8:40 a.m. When I saw the inside candle in the indices and the volume confirmation. Yeah, I was looking at that too. I'm assuming that we got the right time. We're thinking about the right time. Pre-market sounds like a year ago. 840 right here. Yeah, I remember seeing this. And thinking about it. This is actually what I was remarking on though when I was doing the morning meeting. But okay, yeah, you got this little pre-market hammer. Market's gapping down. It's extended. Inside 5 and up also. I don't dislike this at this time of the day. There's some volume going on. It's real. So you saw that. You started looking for trades. I found LCID, which made an inside in the previous candle, and it was big support. What time were we just looking at? 840? No, 840. Yeah, LCID breaks up nicely here off those. And it was big support. And ended up giving a great continuation, even though the market didn't really give it. And it makes me wonder about the importance of relative strength candle by candle. Since if I tried that trade in any other stock, it would have been significantly worse. Yeah, for sure. Relative strength is one of these... It can be a difficult thing to grasp sometimes because of how it works, right? Because there's relative strength on different time frames. And sometimes the index that I'm looking at that's down the most on a percentage basis might be showing the most relative intraday strength, as just an example. So you can't just like necessarily type up all your sector ETFs and say this one is down the most on a percentage basis, so it's relatively weak. Because it's also how it's trading intraday. And then breaking it down even further is stocks, right? Like actually sometimes you see certain stocks hold up better and sometimes they don't. And that will also even adjust throughout the day. So it's an important layer of probability, but it's also, like everything else in the market, it's very dynamic. It's kind of changing all the time. Like, honestly, Apple turned out to be a real struggle today. But Apple right off the open, this was like the first one. This first candle at one point while it was still open looked great. When Apple touched 161 here right away on this first candle, I was like, Apple's leading the market. I was saying in the VTF, I was like, Apple's leading the market. This is like, oh, this is great. This is what we want to see. Apple's going to lead the market higher. Like, maybe we're just going to go here right away. I got a little bit excited because of that right away, and then very quickly it was like, okay, Apple is garbage, and it just, and I kept being like, all right, it's got to recapture 160. We just couldn't do it. Into this rally here, the whole market was rallying at 2 o'clock. I feel like the whole market rally failed because Apple approached 160, and the sellers were just like, no, time for me to sell. And then obviously it finally recaptured it. So I understand 100% what you're talking about, and it's something to pay attention to. So I do pay attention to relative strength and relative weakness in multiple ways. I'm not entirely discounting when something is down by more percentage amounts than something else. Most of the time that means it's relatively weak, but I also have to account for the actual intraday price action that's occurring. Next here from Terry Jones. In this market environment, in your opinion, is it best to use a 5-day moving average versus an 8-day moving average? I think that a lot of what moving averages you utilize is honestly kind of a personal thing more than anything else, and how you read it. I do think that sometimes I'll tell you something is just something I don't agree with at all. But I think that there's a lot of flexibility, actually. It's about understanding your moving averages, if that makes sense. For me, I like to use an 8 and 21 EMA, not SMA, an 8 and 21 EMA on my charts, and that really helps me understand technical equilibrium. And part of that is just because I've been looking at these moving averages for so long. The one thing I don't have a fantastic reason for on why I use it, honestly, is those moving averages. I know that they're like magical fib numbers or something like that. So I like to use 8 and 21 EMA, and then I also like to use on big time frames a 20, 50, and 200 SMA. But Pat is a great trader, and Pat's note, he's looking at the 5-day moving average on daily charts, and he references a 5 and 10 moving average all the time. So that's going to be a little bit more momentum based. It's going to be a little bit faster moving. It's going to be a little bit tighter. There's nothing wrong with that. I just don't do it. But it doesn't mean that I don't read Pat's note and gather all the information that's coming from it to help me with my trading. When Pat makes a comment in his morning note about where the 5 moving average is versus price, I pay attention to his comments. When Pat's morning note this morning said that the market's, opening below the lower Bollinger Band, which I think it closed below the lower Bollinger Band for like 3 days in a row, I pay attention to that. It was just, the Bollinger Band was just one more indicator that the market should bounce amongst like 50 others. But again, you could make the argument that was already there on Thursday and Friday, and that's why you got to continue to manage risk. It just got more and more and more extreme. Next from Jordan. Probably plenty of examples, but Shop with a 21% low to high swing today. Bro! Look at the volume. So sick. Huge move. Was there general market news that led to the reversal? Or was the market still? I think it was all technical. I don't even really think that there's been any new news all of last week or today, to be perfectly honest. I know that there's chatter on Ukraine and Russia, and I know it definitely doesn't sound good when there's chatter out of the United States that we might send troops over there. I'm just very skeptical about the degree to which that's market moving. I'm not saying it's not market moving at all. I've traded a market for 10 plus years where the United States has never not been at war. When are we not sending troops somewhere? When, whether it's Iraq, it's Afghanistan, we got more troops throughout the world than anybody else does. And I went and I traded through Crimea. Russia's already done this. They came through and they were like, you know what, we just think that we would rather have this part of Ukraine as part of our country because it's strategically important to us. And there was a war, and we didn't send troops, but you better believe, at least in a proxy manner, we were supporting Ukraine, whether it was through weapons or whatever else. I've seen that stuff in the past. When the market is already weak and already selling, it can definitely just be another, flame on the fire to add an extra selling, an extra excuse, if you will. But I think that the entirety of this move, these last 5 trading sessions, has been technical in nature. It's just really the dynamic of the market itself. And yeah, it's repositioning as well around higher interest rates. It's certainly that degree of repositioning, but the repositioning, when XLE was down 2.5% today or whatever, where was your repositioning on interest rates then? It was by that point we had gotten past money rotation, like Friday into today. We got past money rotation and we got into panic sell-off mode. Everything's got to go. So I really don't think that there's been anything new. It's just market was up a lot, and markets work in feedback cycles. Selling leads to more selling. That's what happened. Also from Terry Jones, my skis are waxed, ready to head west. What resort? Well, let me know what general area you're thinking. If you're coming to California or Wyoming or Colorado, I've skied them all. I can give you my favorite suggestions. I skied yesterday out here in Wyoming, and it was awesome. It was awesome. So much snow. I wish you guys could see. It probably looks weird. It probably looks like I'm in a bedroom, which I am in a bedroom, but it's like a spare bedroom. But the room here has views of the mountains in multiple directions. I can see multiple mountain ranges, and I'll be sitting here trading, and like animals will start walking by and stuff. It's like the room I'm in right now is awesome to trade out of. I can see the Grand Tetons himself out that window over there. From Tommy, when looking at support and resistance, do you like right to left or left to right? It's an interesting question, and no one's ever asked me that before, and I've never even thought about it. I don't think I would... I guess it's actually right to left if I really had to think about it. But usually what I'm doing is I'm starting with a snapshot. And usually that snapshot is 90 days, right? And it's not left or right really. I guess it would be still right to left, but it's kind of neither. It's just taking in the snapshot of 90 days. And then from that point, if I want more information, I scroll out, which would inherently mean that I'm looking from right to left. But it doesn't necessarily mean that I necessarily put more weight on what's more recent, even though I do. I do put more weight on what's more recent than what's in the past, but I pay attention to both. Hope that makes sense. Great question. Never been asked that one before. From Andrew, have been experimenting with trigger math from your position sizing video. Are there any other ways you look at calculating risk tier size to experiment with? I think that video really covers it. You know, it's spacing risk first, knowing how many dollars you want to risk, and then that determines the tier size that you want to take. And knowing how many dollars you want to risk is dependent upon your letter grade system. So the spacing risk is just told to me by the charts. How many dollars I want to risk is told to me by the probability. Therefore, how many tier sizes I'm taking, how much size I'm taking, is going to just be the backwards fill-in math on that, right? I want to risk this much dollars, it's this many space, therefore this is how many shares I have to take. Wow, VIX high today was 38.94, and we closed at 29.55. It's still a very elevated VIX. Holy guacamole. Someone yellowed VIX 2202, 16, 80,000 contracts. Hedging for a crash. Interesting. I am 30 minutes out of Jackson, Wyoming right now. Benny. All right, gang. It is 5:15. Whew. Get some sleep tonight, gang. Relax a little bit tonight. I almost feel like, you know, usually now I plow through emails and do other work for a couple hours, and I'm sure I've got a ton of emails in my email inbox, but if you don't hear from me and you email me today, it's because I needed a mental break. I hope everybody had a good day today. It was crazy. At a very minimum, I hope everybody was able to manage risk properly in a way where they kept themselves and their accounts safe, because that's always the most important thing. So have a great night, everybody, and I will see you all tomorrow.